The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. And don't forget, you can listen to us from anywhere on your mobile phone at tfnn.mobi. Let's check out where the markets are at right now. It's been a pretty choppy day. Just a little bit of up and down movement the entire day. Here we got the S&P is down 3.75. We got the NASDAQ down 10. We got the Dow down 47. And we have the Russell down a little over 5 points right now. We have gold up 70 cents, and copper is basically flat on the day. Silver right now up about 0.25%, not moving a whole lot from previous day's close. And we got corn is a nice mover today, down 9 points right now, down over 1%. Soybeans is up a mere $4 right there, so a pretty small move in soybeans. We got oil down $1, so a nice solid 1% move. Natural gas is up 2% on the day. Natural gas moving huge for us. We got euro dollar just down 16 pips. Pound dollar, if you're getting pounded a lot, recently is up 48 pips right now. Aussie dollar is down at 44. And had a great trade on that last night and worked well with that news trade there. Doing a spread over on Nadex. Looking over at the USD, we got down 26 pips right now. US Canadian up 29. US franc is down 9. We got the dollar index overall is basically negative, but pretty much just flat on the day. Choppy along with everything else. So let's check out what's going on in the world right now with fundamentals. There's not a whole lot of announcements coming out, hence the choppy day. And that's one of your warning signs for a choppy day. And sometimes it's better to sit on your hands or, just go out and hang out and take some time off, whenever you don't see a whole lot going on in the markets, a whole lot of reason for something to go off. But looking at everything we got last night, we had the Aussie dollar report come in on that building approvals that came in negative. And we saw the Aussie dollar decline based on that report. Let's go ahead and pull up a chart on it, and we'll look at it real quick here. Put this over. We'll go ahead and pull up the Aussie, and we'll break it down. Look at 10-minute bars on here, and check out, like I said, from last night. And we had a couple decent moves on it. But right here at 7:30 is actually when the announcement came out, and it went down and sort of took its time. Up and down for a while. Really did take its time. Finally pushed on down right there and allowed that straddle spread, if you put that one on, which closed out, I did the one that closed out at 10 o'clock. If you did that one, then allowed you to be able to go in and take advantage of that, or 9 o'clock, sorry, the one that closed at 9 o'clock. And allowed you to take advantage of that nice move, and then just continued on down, moved a little bit further. And as we can see right here, if we go in and back up, actually broke through the 1 deviation mark. Tried to hit 1.5, couldn't quite hit it, and moved on back up and hung around the 1 deviation mark for a good couple hours there before coming on up, and then seeing that 0.7 deviation as a bit of a resistance area. It finally decided to break through that about an hour and a half later, moved on up to half a deviation, and now it's just bouncing in between half and 0.7 negative deviation move for the Aussie dollar. And so, again, love trading the news. Simple, quick, easy, and defined risk. So I used to hate the news. I would avoid the news at all costs. Now I embrace it. I love it. And before I had Nadex, it was, it's one of those things you need to watch out for. You need to tighten your stops or get out or, whatever. Don't trade into a number, But with Nadex, it's welcome. You're looking for, that movement. You want that volatility. You don't care what direction it goes. You just want it to go. And so you want those pairs that have a basically a historical probability of moving a decent amount. So let's go ahead and start off with what we're looking at tonight. And let's go ahead and wrap up today, and then we'll go into tonight. And let's see, last night we also had Spanish unemployment change came in better than expected. So that obviously have a bit of an impact on the euro dollar. So we'll go ahead and pull that one up right now. And we can see, overnight, euro dollars pushing on down there about 3 a.m. right over here. Right after the report came out, we saw the market move up a little bit, and it really just kept going right back and sort of doing, you could say, a gap fill over and over and over again. And hasn't had a major impact move. It wasn't a high impact announcement. We didn't call out looking at that one as one to trade. One we did look at, let's go ahead and check it out, is the pound dollar. The pound dollar had a report come out that was a high impact. It was a construction PMI, came in worse than expected. And that number was released, looks like right here at 4:30 a.m. You can see right on the chart without even knowing what time when the news came out, because you see that massive drop right there. Well, it came on down. It dropped half a deviation. Didn't hit the half deviation point, but it dropped half a deviation from where it was before the news came out. So you could have done a spread. You could have done a binary, like you could have done a spread that expired, say, at 7 a.m. Or, better off, you could have done a binary that expired at 3. It had plenty of time. And but it's moved down half a deviation. It's now moved up a full half deviation. And it's sort of just, hitting that as a resistance, not showing a whole lot of strength past that. We'll see what happens before the day wraps itself up. And again, we're still looking at euro dollar to see if it's going to be able to move up and really break this 1.30 barrier. It's really just been oscillating around it the entire time. And it hadn't done anything with conviction yet. Now, what else do we got? That really was our major news for the day. So, quiet day. However, tonight, what do we got going on? Well, again, we're going to be back onto the Aussie dollar right here. And at 10:30, actually we got two of them. 7:30, we're going to have the retail sales report. So that could definitely have an impact on it, maybe half to a 0.7 deviation move. And then the market's going to get rocked again with the cash rate for the Aussie. That's going to come out at 10:30. Challenge there on trading Nadex is you're going to have the spreads that expire at 11, and you're really going to be looking for ones that expire later. So you may have one that can roll over. And let me show you how to find out what times those come up. I'm going to pull it up on the Nadex website for you right here, and to show you how to find out what the expiration times are. So you'll be able to plan that in advance. So if I go on here to the Nadex site and I go to range of markets, and then I click on Forex, I can scroll on down here, and let's say we want to look at the spreads. We're going to go to contract specs. So click on contract specs, and then let's scroll down to spreads. Okay? We're going to find the Aussie dollar, and I really like to trade the 2-hour spreads on these announcements. So we're going to see 8, 9, 10, 11, 12, 1, 2. So what we know is these 2-hour ones are going to keep going. So you're not going to have a longer time frame, not like a 5 or 8 hour, because that's going to expire at 11. And since the news announcement happens at 10:30, it only gives you 30 minutes to take advantage of it. So you're probably going to want to be looking at the 2-hour spreads right here. And there'll be one that'll expire, if it's 10:30, then there'll be one that's expiring at 10 and 11. So the 11 o'clock one would actually give you a little bit of time there, but you'll also see the 12. So if you get in at, let's say, 10:15, I like to get into 1 to 15 minutes before the news. Then the 10 o'clock will be over, okay? And then you'll have the 11 and 12. So you'll be looking at the 11 and 12. The 12 o'clock one gives you the most time. And it also is only going to be 10 pips wide, or it's going to be, narrower, 10 pips, but it'll be 100 pips wide. So not too wide, which means less premium built in. Also, you get more what you call gamma. You don't have to get all into all that stuff, but basically your midnight one is probably going to be your best one. But look at the 11 and the 12. See which one lines up best for you, okay? And that'll help you know. And you can even also check out the binaries that expire at 3 o'clock the next day and see if maybe there's a great risk-reward trade there. But we are looking for a decent move, and so you may do a combination. You may decide to go ahead and hop in and do the 12 o'clock spreads, and you might decide to do the 3 o'clock expiration binaries. So that's the 12 a.m. spreads and the 3 p.m. Eastern Time at binaries for that cash rate announcement. That's their interest rate. That's their Fed funds rate, if you will. And so usually does have a nice, decent impact on the market and, on at least the Aussie dollar. And that, of course, turns into everything else and just allows for a nice, good volatility move. We have no idea, of course, where it's going to move, where it's going to go, how it's going to work. But we are looking for, just hopefully a very good move on that. But, looking overall at everything, seeing a pretty high impact and sometimes a massive impact depending upon what comes out, what the expectation is. They're expecting that they're going to leave it at 3%, and they probably will leave it at 3%. They did move it down, even though they expected them to leave it at a certain point twice. Let's see here. Back in November, they changed the rate. They thought it'd be 3, and they actually bumped it up to 3.25. So that surprised everybody. And then also in October, it was at 3.5. They thought they'd leave it at 3.5, and they bumped it down to 3.25. So they have surprised the market a couple times here just in the last 6 months. So the possibility of a surprise is always there, always available. And I've heard a lot of speculation that they might be looking at moving it, but you know what? Who cares? Doesn't matter. Just go in, straddle it, see what happens, strangle it, and check it out. You can always check that out, of course, on your demo account at Nadex. And if you don't have one, get one. Get one right now. You can hop on there and you can try this trade out this evening. And you can go in, And like I said, it's 10:30 Eastern. So, I mean, if you're Central, it's 9:30, different coast, of course, earlier for you. But, easy trade to put on. And right here on the right side, you're going to see Nadex. Click on that Nadex banner. And then under our products, there's a demo account. Click in the demo account link. Fill in your username, first name, last name, phone number, and email address. Click apply for demo. They're going to send you a password, and you'll have access in a matter of, a few seconds where you can log in. And you could go in and, work on actually, trying this thing out. And basically what it is you're doing a spread. And let me show you what you're going to do. If you'll hop in, and there's two things. One, if you'll get that. Two, if you'll go ahead and sign up for the demo of our diagnostic spread analyzer, you'll be able to use that as well. And the deviations as well. You sort of need all these tools, put them together. It's a simple trade. You just need the right tools to do it. Okay? So that's how you get the demo. And if you have a demo or if you have an expired demo, you want to know how to get that extended, just send me an email over here under our contributors page on TFN, and I'll be happy to let you know how to get that demo extended. And then if you want a live account, just click on Create Account. And I do suggest you hop on there, check that out, just so you can see the live account. There's no fee for having a live account. There's no platform fee. There's no data fee. The minimum amount to open it's only a $100 funding requirement. You could do this trade with less than $100 in your account. Click Start, and you can go from start to funded in as little as 5 minutes, and you can be ready to go. So that's how you sign up, get that demo account going. And like I said, right over here on our homepage here at tfnn.com, click on the Diagnostic Spread Analyzer and fill that information in. You get a 2-week trial. You can try out the scanner. You can try out the deviations. And we do update the deviations every day. All right? So, again, every day at 7:15. So you can hop in here, and you'll see the deviations listed on it. What are these deviations? They're not pivot levels. They're not fib levels. They're not standard deviation. They are implied deviation, okay? Which means using that whole bell curve theory of how far is the market going to move. But instead of going, how far is the market going to move today based on how far the market moved yesterday, it's saying, how far is the market going to move today based on all the market participants' input. So when people go in and they buy options, and they buy more options, implied volatility goes up because more movement is expected. If they're getting rid of them, open interest going down, then implied volatility can drop. So this right here ties in that number, that implied volatility. We look at a large variety of different option markets, and it lets us know, how far should the market move today based on how far the market says. And then we tie that number in, and we give it to you in black and white. So there's no interpretation required. There's no learning curve here. There's the number, all right? And just look at Aussie dollar. I mean, we'll pull that up, and you go down, and you can see right here where it stops and hesitates. It hit right there, that half deviation, chilled out for a second, about 20 minutes right there, dropped down to 0.7, and spent, a couple hours, but at least an hour there, and then dropped down again. And you can see each level serving as a great support resistance zone. But more than anything, just letting you know how far to expect the market to move when you're doing these. I'll go into more detail so you can check this out tonight yourself. Stay right there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostics Trading Hour. And what I'm looking at right here, looking at the Aussie dollar for tonight, we're talking about looking at doing, potential spread trade tonight. We have a big impact report, usually a big impact report. And so we're looking at ways to play that. The reports that we got coming up we have two of them. We have the retail sales. The second one is the cash rate. And one of the important things is you need to know where to take profit, okay? If you leave these trades on, you will probably end up losing, all right? You need to take your profit. Your goal is to make money on market movement. So whether it be up or down, you don't care, but you want the market to move. And probably the number one mistake I see traders make on Nadex is they don't take profit. They put it on, they see that big max reward potential, and they leave it there, and they get greedy. You know what? If you can hit a whole lot of base hits, getting 100% return on your investment over and over again, I think most of us should be pretty happy with that. But it's sort of funny. People go in and they buy something for $5 and they sell it for $10. They're like, I only made $5. I'm like, if you bought a stock for $5 today and could sell it at the, in an hour for $10, would you not be ecstatic? And they're like, well, yeah. That's no different than buying a binary for $5 and selling it for 10. Do 100 of them, do 200 of them, whatever, I'm not saying you need to buy the $5 binaries. I'm just saying a $5 change in price on a $5 cost is fantastic, okay? So you want to stack the odds in your favor. You want to have realistic expectations of how far something's going to move. And so when I was looking at it last night, I was shooting for actually this 0.7 deviation level on the up and down side over here. And so when I did that, I put that trade on. And so I was going for 0.7, and then it's pretty actually close to 0.5 on the upside. And had about $20 risk on the trade. And I was going for, I want to say it was 17 on one side and 7 on the other. And let's see, maybe I can even pull it up. And the trade didn't work out, I'd say, as well as I wanted it to, but it still made money. So, can't complain about that. And let's see here. If I can find it, I will show you the trade from last night. All right, here we go. Okay. So got the trade up right over here. It actually did all this on my phone, by the way. You can actually see it says came from iPhone. Okay. So I placed this trade on my phone last night. Didn't even go to my computer. I got the deviation levels off the website from my iPhone, and then I went in and placed the order on the Nadex app. And so it's pretty cool. But hopped on here, and I sent an order to buy this spread right here, 1.20 to 1.030 for 1.027. Well, what does that mean? Okay. Well, if I go over here and expand this out, and we'll zoom in a little bit more even on it, so that way we're seeing the actual time frame when we're looking for the trade to take place. And we got in at 7:30, so right around here. Okay. And I can go in and, let's see, I think I have a new indicator on here I was playing with the other day, so see if I can find it. And it makes it a little bit easier for me to draw. All right. And so with this, we had the 1.02 to 1.30. So right over here, 1.02 up to, 1.030. Actually went even higher than that, so let's see if we can get it and drag it a little bit further. Shows me I could have made money all the way up to there on that bot one. And what I paid to actually place that trade? Well, if the floor was 1.02, which it was, and by the way, they set the floor in ceiling. It's 100 pips. So wherever the market was before this thing opened, they're going to put it 100 pips above, 100 pips below for the lower spread, and they'll have one spread in between. So they're going to have one spread right up here, 100 pips above where the market is. And then they're going to have one spread down here, 100 pips below where the market is. And then they'll also put one in between. So it isn't like, if you think like call and put options where you go in and you choose your vertical or whatever. I mean, this is not a vertical, okay? It's a different thing. It's a different beast, right? So bull and bear box spread is what I call it, because if you draw it on a chart, it looks like a box. If you buy it, it's bullish. If you sell it, it's bearish. Why would they put this one? Well, maybe it comes down and you want to buy, or maybe it goes up and you want to sell. So it gives you the opportunity to have a low-risk trade for that. Well, down here, we have a floor of 1.02 on the trade. And so I could even, put a note right here. And 1.0200 is my floor. All right. And then on that one, I can go over here and go, okay, well, that's my floor. If I bought it for 1.0200, then, what was my risk on the trade? And that's one of the things that can sort of throw people off. And let's see if we can make this a little bigger, make it easier to read. Okay, there we go. So 1.02 is my floor. And then my ceiling, okay, on the other one is the same thing. It's 1.0200. So now I'm going to show you after this how we actually know what our risk was on the trade and how we know where we want to take profit. So stay tuned right there, and we'll be back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Checking out the Nadex spreads for the Aussie dollar straddle. And so what I got right here is we got the ceiling, we got the floor, and we're basically looking at, I bought the upper one, I sold the lower one. I bought the upper one for 1.0207. Well, here's one of the cool things about Nadex. It doesn't matter if you're trading the Aussie dollar, if you're trading the pound, if you're trading the US yen, if you're trading the DAX, if you're trading corn, soybeans, you know, whatever you're trading, S&P 500, the Dow, whatever you're trading, every spread, every tick is always worth $1, and the tick is always the last digit it's quoted in. It'll always move in an increment of 1. So 1 like on the Dow, or say 0.1, you know, say like on, you know, gold, or 0.01 like on oil, or 0.001 on natural gas, or 0.0001 like on FX. So it'll always move in an increment of 1, and every single tick is always worth $1. So you don't have to do all that weird, what's a quarter of a tick and an eighth of a tick and, you know, all this other stuff. And, you know, it's really simple. It's an increment of 1, it's worth $1. So if I buy it at 1.0207, and the floor is 1.0200, 7 ticks, okay? Well, 7 ticks times $1 is $7. So I had $7 risk per contract on that trade. Now, I did 10 of them, but I had $7 risk per contract, okay? And then we hop on over and we go, well, what about the sold one? So the sold one, we came on in here, and we were looking at this trade to figure out, you know, okay, so we're going to sell as well, because we don't know if it's going to go up or down on the report. And we sold. We sold the 1.020 to 1.0100 box spread. So the left side's where I got in, right side's where I got out, and then the top is the ceiling, bottom is the floor, top is the ceiling, bottom is the floor. All right, so we go in and we go 1.0200, all right? And then we go, okay, well, what did I sell it for? Minus 1.0183. So 17 ticks. So 17 times $1 is $17. So my total risk on the trade was pretty simple. You just add the two together. Okay, 17 plus 7, $24. That was my risk. I was going for $240. What would have had to have happened for me to have made $24, or on 10 contracts, $240? Well, it would have had to go 7 ticks above where I bought it. Or sorry, it would have had to go 24 ticks above where I bought it, 24 ticks below where I sold it, plus whatever profit I'm trying to make on the trade. So on this side, I have 7 ticks of risk. So I really wanted to move $24 plus 7 ticks. So let's put that together. It's real simple. All right, I will make 24. If it goes down, okay, I want to make 24. I'm not going to lose the 17 because I'm making money on the sold one. But I'm going to lose the $7. Let's say if it goes down. Okay, so the bought one loses, the sold one is making money. So 24 plus 7. So I need to go 24 plus 7 to the downside. So I needed basically 31 ticks below where I got in. Well, where did I get in? It's where I sold it at. All right, so if we go over here, we look at, we sold it at 1.0183. Okay, so my goal, that doesn't mean I'm going to hit it, but my goal, all right, what am I shooting for here? 1.0183 minus 0.031. My goal is to actually be able to take the thing off at 1.0152. So let me pull these calculators off here. Let's look at it and go, okay, well, that's what I need to make money on the downside, 1.0152. Well, is that within our range, that 1.0152? Well, remember, the first rule is I want to be able to make a 1-to-1 with inside of a 1 deviation, so 1 up or 1 down. We're at 1.0138, so is 1.0152 greater than 1.0138? Yes. Excellent. Okay. Well, what about the next level? We got 1.0157. All right, well, so that's pretty close. We got 5 ticks of difference there. Not bad at all. And so that's okay. What about 0.5? 1.0170. Well, it's a little further than that, but that's okay because we're shooting for further than that. But if it's within half a deviation, I mean, that's even better. Now, the reason it's a little bit further down is simply because the market's a little bit further down from the actual ceiling. It's lower. All right, so the market when we got in on this trade was sitting, right around 1.0192 or so. So it was already about 8 ticks into it, so that's why it pushed it down a little bit further on us. But that's what I need to make the money on that trade. And it wouldn't even be a bad idea to try to take it off like right at the 0.7, so maybe give up a few dollars of that profit just in case it doesn't quite hit it. And, because you don't want to make your profit goal your goal, if that makes sense. In other words, my goal, yes, is to go in and be able to buy it back at 1.0152, because then I'd have 100% return on investment of the total position. However, my profit goal has nothing to do with where the market's going to go. So I may decide, you know what, this may not be 100%, trade. I need to go ahead and take off my profit like at 1.0157, maybe a couple ticks above. And I actually did have an order to go in and take it off. You can see it right here at a 0161. So I actually had an order already sitting there ready to take profit a little bit above that 0.7 deviation. And you see how it came down and it just worked on it for a while before it finally did break through. But that's where I had a resting take profit order, sitting for me. It came down and touched it right as it was closing out. And so I got to get out, and I want to say my actual exit price was like 1.0164. Because I didn't get filled the second it hit it. Came back up a little bit because the spread wasn't at that price yet. But it settled out 1.0164. So made some decent money on the trade. Not as much as I wanted to. But, nevertheless, still made a profit. And, so how do I know how much profit I made? Okay, well, I know that I had $17 risk on one side, $7 risk on the other. I had $24 risk. And I know that I, lost $7 on one of the trades. And so if I went in and I got out over here at 1 point, let's see, what was that right here? Open that up again. I just want to make sure I give you the exact numbers. So right here, 1.0164. So if I had $24 risk, I know I lost $7 on one side. I go, okay, 1.0164. And I sold it again, I sold it at 1.0183. So I may even type that in. Let's do that. 1.0183 minus 1.0164. So that's 19 pips of profit. Okay? Take out the $7 of risk on that. So, 19 minus 7. $12 times, 10 contracts. $120 profit on the trade. Half of what I was going for. I was going for around 240. A little bit more than that. But, still made $120 on the trade. So not a bad trade, especially for doing it on my phone in the evening over a course of about 3 minutes to put it in and about, then just let it go for, about half an hour. So let it do its thing, let it work its way out, and then by the time it expired out, I guess it was an hour and a half later, hop back on, saw where it was at, made some money for the night. So not too bad and not a lot of work. Now, what about the upside? How much would I have to make? Well, if I want to cover the whole cost, okay, which was 31, that's that 24 plus, 7. So if I want to make 31 pips, I need to make 31 plus the risk on the other side. The risk on the other side, remember, was 17. So if the risk on the other side was 17 pips, then I need to make, 17 plus 7, 24 pips, plus 17. So 41. So I actually have to go 41 pips above. All right, so 17 plus 7. So yeah, 24 plus 17. There we go. So 41 pips, because I'm assuming I'm going to lose all 17. I'm going to keep the 7. So 41 pips above where I bought it. Well, I bought it at, let's see here. So if we got 41 now, and I know where I bought it right here at 1.0207 plus 41 pips. That's 1.0248. So that's really my target goal on the upside. Well, is that a realistic target goal? Is that something I should be shooting for? Well, let's look at it. That's where the deviations come into play. 1.0234, that's a half deviation. I don't want it to be, further than 1. That's a big rule. I'm not going for further than a deviation. We got 1.0246. And so that's right on. That's pretty close. It's in a couple pips. So it would be wise to probably go in and maybe take it off a little bit sooner, like 1.0244. 1.0240, and you can actually see I did have a order sitting right in here at 1.0240 for take profit, just right below that deviation level. So I was using that deviation to let me know, hey, let's get up right before it gets there, just in case it has a hard time getting up to it or breaking at that level. So very simple, very easy trade, and not a lot of work. So also I bought the one above where the market was, I sold the one below where the market was. And I use the deviations to tell me, hey, where do I need to take profit? If it's close to a deviation level, try to take it before it gets there. Try to be the front of the line, not the back of the line. And, how do you find these spreads? Well, there's a lot of ways to do it. The easiest way is to use the live spread analyzer. And so you just go right over here. You've got a box spread scanner. You can even use this if you have like an iPhone. You can even use it on your iPhone. And you can go in here. We click spread scanner. It opens up for us. And we choose our market, such as Aussie dollar. And then we go in and say, you know what, I want to go both directions and 1-to-1 reward risk and $100 maximum risk. It's going to show me every potential one that exists. And I could go, okay, well, let's say, I want the most time possible to expiration. And, I don't want it to move real far. Well, this one only has 3 pips to break even, 76 minutes. I'm going to get rid of these 16-minute ones. So, those are too close. So I'm going to say, okay, let's just get rid of those. Gets those out of the way, so now I'm filtering it down. It makes it really easy for me. So this is a 100 pip and a 200 pip wide, and this one can make a lot more money, all right? But I have to risk a lot more money to make a lot more money. So I could also do 2 of these. And so the way that you sort of know like which one's better between the two as far as risk and reward is look at the reward to risk ratio. This is saying for every $1 at risk, I have the potential to make 6. For every $1 at risk, I have the potential to make 5. So that lets me know, hey, this might be the better choice. They expire at the same time. This one right here has to move 3 pips. That has to move 2 pips to be break even. Who cares? It's a pip, whatever. And do I really expect it to move 200 pips today? Well, according to my deviations, no. So I don't have that expectation of the market. Could it? Yes. But and if risk was equal, would I choose the bigger one? Yes. But 1 full deviation is 64 pips. So even if you go 1.5 deviations, you're talking a 100 pip move. And so really, I would not have the expectation it's going to move that far. Therefore, that makes pretty easy for me because I can just go in and go, okay, well, forget that one. This one has less risk and it has a better reward to risk ratio. That's my spread. And then I go in here, okay, well, what about the sell side? Well, I want one that lines up. So in this case, we have a floor of 1.0160. So I'm probably going to want this one right here because it's 1.0160. This one has to move 11 pips because we're in the money a little bit. Okay, just like last night, same thing. I was in the money a little bit on one side. I got $4 risk on this one. I have a $92 profit potential. And I'm not even placing this trade right now. I'm just giving you an example of how to use a scanner. But notice how it shows me that my floor and my ceiling are lined up, shows me a risk-reward graph of where I make money. And I can even click on this button right here if I'm on my computer, and it'll open up the ticket for me in Nadex. So automatically opens it up, so I don't have to go find it in Nadex. I don't have to go searching for it, hunting for it. It's right there in front of me. It makes it very, very easy to execute the trade. So that's just one example of many ways to trade on Nadex, but it's probably one of my favorite ways to trade on Nadex. As you notice, I'm calling these out all the time and talking about different trades and different ways to do it. And so tonight you got the 7:30 retail sells and you got the 10:30. I do expect the 10:30 cash rate to be the bigger mover. I think we're going to see an initial pop off the retail sells, and then I think it's going to go flat, and they're going to wait to see what they say at the interest rate. So be aware of that. It's one of those trades. The retail sells, you want to get in it, get out of it if you're going to do it, and get ready for the other one. And that's just my guess. So that's why I'm going both directions. And then let's see here. If we go on over, GDP will have LCS GDP the following night. So a lot of cool trades setting up. And then we'll do, let's see here now, as far as what about early in the morning, if you're an early morning trader? Well, you're going to have the Spanish services PMI, the Italian services PMI, okay? You're going to have pound, you're going to have the services PMI coming out for the pound as well. And you can get all those PMI numbers if you don't know where to get them. You can get them over on marketeconomics.com. Again, that's market, M-A-R-K-I-T, economics.com. And so all those numbers are coming out. They're all high impact. And so you should be seeing the pound move at 4:30. The euro could be moving at any given moment. I mean, we got the 315 Spanish one. We have the 345 Italian one. And I'm trying to see if there's anything else that move the euro. We'll have a medium impact retail sales a little bit later. But you could be looking as early as 3 o'clock to put on maybe a 1 deviation move on the euro dollar for a binary that expires, say, at 3 o'clock to do a strangle. So that would be a potential trade setup that you could take advantage of. And, of course, demo these until you get them down. And, if you've already signed up here, we got tutorials about the bull spreads, the binaries. We talk about, who Nadex is. We go into how to use the platform. So, take you through literally every single step. And, literally, how do you get started? How do you open an account? How does it work? How do the markets work? How do the binaries and spreads work? How does the platform work? So we walk you through everything. So definitely take advantage of that. If you have questions, you can use this help desk area. You can ask me questions directly, anything that you want to know. Be happy to help you out and respond to, any questions that you have in there. So now you have an idea of how to set that up tonight. You also have a potential, like I said, binary trade for tonight on the euro dollar, and then a spread or binary trade on the pound dollar at 4:30. Then we're going to roll into the morning with the ISM non-manufacturing PMI tomorrow morning. Well, what pairs could we look at for the ISM non-manufacturing PMI? Okay, because, you can do indices. A lot of times, though, indices don't seem to move enough, at least to make me happy whenever I'm trying to do trades. And so looking historically, I see some pretty decent moves consistently on the U.S. yen. And that's been a big thing we've been seeing a lot lately of is the U.S. yen having some, with all the monetary things going on there, I think especially. But just seeing some good moves, across the board. So I'd probably be looking to trade as far as currency pairs. The ISM, I'd be looking at U.S. yen for tomorrow when that report comes out at 10 a.m. Eastern time. And right after that, we'll be on our show here a couple hours afterwards. So stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostics Trading Hour. And checking out a few different things that you can look at on here. But we were going through how to do a spread and how to do a spread straddle. And you can also, of course, do binary strangles. But hopefully you learned a few things, picked up a few tips and tricks along the way, things that you can implement in your trading tonight that you can actually use. So, give you a little bit of an advance notice on the trade, but hop on there, and the steps that you need to take, okay, is go to TFNN.com. Step 1. Go to Nadex banner right there on the right side, and at least get a demo account, if not a live account as well. Okay, demo account takes 15 seconds. Live account funded takes 5 minutes. All right, and then once you're done with that, go over here to the Diagnostics box spread analyzer, sign up, 2-week free trial, get you access, ask questions, learn about it, see how it works. Step 3, join me in San Mateo with Tommy O'Brien and with Dan Cook from Nadex. Register for that. Come see us live. We're going to be talking about Nadex binaries and spreads. We're going to talk about how I use them with deviation levels. Tommy O'Brien's going to go in identifying the trade and setting up the trade. And then we're going to come back. We're talking about risk and money management. Probably the most important thing, okay, your risk and your profit management. It's one of the most important things in trading. And with Nadex, you have risk management, but you don't want to risk too much. And you got to have profit management so you don't give away those profits. So we're going to put that together. And like I said, Dan Cook from Nadex will be there as well. And we'll all be there answering questions, giving away over $2,500 in prizes like subscriptions, silver coins, books, and a whole lot more. So we look forward to seeing a lot of you out there. And let's go ahead and do a quick market wrap on everything that's going on in the markets right now. And what we'll see is we got the S&P deciding to move up a little bit into positive territory. It's up about half a point right now. We got the NASDAQ almost there. It's down 1 point at the moment, oscillating back and forth. We got the Dow down 12 points. We have the Russell down just 1.7. Gold is only down 30 cents right now on the day, with copper is flat, along with silver being flat now on the day. We got corn still down over 1%. Soybeans has decided to wake up and make a move. It's up about 0.75%, trucking its way towards 1%. We got oil down $1 on the day, still 1% move there on oil. Natural gas up over 2 or nearly 2% on the day. Euro dollar still only down 10 pips. Looking like it wants to show a little bit of strength there. Pound dollar up 62, Aussie dollar down 30, U.S. yen down 27, and U.S. Canadian up 25, with the U.S. franc down at 9 pips. Dollar index pushing a little bit more into negative territory as the indices are trying to make a climb into the end of the day. And we got our market wrap there. What to do and how to set things up. Let's go ahead and look at a few of these different pairs and see what's going on. And we'll wrap up the day with that. Right there we got the S&P. It moved down half a deviation, pulled back up, did a complete gap fill overnight. So a very nice gap fill trade. Wasn't truly what I would call a gap fill, just because it doesn't meet all the requirements of how I like to trade gaps. It was too small by the time it came around. But Nadex has done some cool features in. I can't wait until they do. Be even more cool trades that we can do. Checking on out, looking over at the Dow. On the Dow side here, we got Dow has almost went up and touched that gap. And moving up right there, but stayed really within that half deviation range. And we can go over, we can check out the NASDAQ. And on the NASDAQ right there, we can see same thing, half deviation. So really all the indices sort of moving in lockstep there of just staying within that half deviation range. Hey, let you know where to trade it, how to swing trade it, So there's a lot of different things you can do. You got to have different game plans. And this is one thing I do talk about a lot, is having different plays. And, so many traders have sort of like, one play, their playbook. And imagine a football team with only a Hail Mary pass. You got to have different plays for different parts of the game. Today is a flatter day. You need different play types to play today, as you do on that day like, the last few days we've had where we've had some big volatility a couple times. So you want to have different plays, different ways to trade the market. Nadex gives you a lot of opportunities to play in different ways. I hope you have a great day, a safe day. I'll see you tomorrow. Stay tuned. We've got another great show coming up right after this.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.